Hey guys, Mike here. So we get to answer your questions, talk about your comments. I want you guys to participate because I'm going to put some of these questions out to you as well, especially when it comes to my bond experts, oil experts, things of that nature. I'm going to be covering a whole slew of topics, so I'm going to try to get through these as fast as possible because as we keep doing more and more Saturday videos, a lot more of you guys are participating, and so you're not trying to keep these under a certain amount of time. So let's go ahead and delve right into it, and we're going to start off right here with our first viewer. Who says, Mike, can you tell us a little on the theory of choosing what to believe when gathering information? Also, how do you keep what you think and want to happen from affecting where you look for information? I've always thought that charts and their history are ideal for forecasting. And I would say, honestly, go find people on Twitter you trust, right? I like this person right here, as you can see. And also another news outlet on Twitter is this right here, just because it comes in fast and I can kind of sort through stuff really quickly. And what I try to do is do a double confirmation. That's what I try to do with it. And I have a pretty good BS meter. I can see a con artist coming from a mile away. And so I'm able to use that kind of stuff. So that's just a couple of the sources I like to use. And yes, the charts are huge. That's why I present them to you guys. And so, get used to using, logarithmic charts. The trend line, the long-term trend lines do work. I mean, I think we've seen that and everything. And so, please put in the comments what sources you use and people you trust and stuff. Because, a trusting source, it is hard to find. And so let's be real about that. So, and you do kind of got to have a BS meter, especially, but I try to filter as much as I can of the BS coming out into this channel and stuff. Now, Maverick Jones says, just saw that Saudi is going to hike supply. Saudi Arabia may start unwinding its production cuts sooner than later. And this is true. It just came out yesterday. That they may end up doing this. Would be nice, right? Because it obviously would help increase supply, which hopefully will decrease oil prices for us, which also should decrease gas prices. So thank you for that one. Also, one of our viewers said, July 2008, gasoline hit a record high. By December 2008, gas bottomed. By February 2009, the stock market bottomed. Now, what he's talking about, and you can use this going forward here, right? That's what we like to do on this channel. Here is U.S. oil, right? And then you have the S&P. And you can see these are recessions. That's a shaded area. And you can see oil actually bottomed before the market did. You can see right there, bottom right at the end of that recession, because we're in a recession, things are slowing down, right? So oil is definitely taking a hit. It bottoms, and then the stock market bottomed. You look in 2008, it bottomed about a month and a half before the stock market did, but in 2020, it bottomed after. So it doesn't always work out, but it gives you kind of a second indicator to say, hey, wait a minute, if oil is starting to show a bottom here, is the market bottom yet? Maybe it's going to start to. Now, our next viewer came across and said, looking at what the market does after the September chart, I was immediately looking for 2006, 2007, and there were a no-show. In my opinion, those years would more closely mimic current conditions. And what he's referring to is the chart shows you what happens if we're up 10 to 20% through September of the year, what would happen in the fourth quarter. And for me, I hear a lot of people trying to compare these day and ages to like 2006, 2007, stuff like that. And I'm like, not really, because if you think about 06, 07, the housing market was booming, right? And here the housing market is terrible. Rates were going up then, rates are going up now, the housing prices were going up then, the housing prices are going up now. But remember all the shenanigans that were happening to allow those people in the houses? Well, suppose that's not happening now. It's starting to, right? But that's what was driving up the housing market, was people literally who had no business buying a house, and it wasn't their fault because the banks were literally doing predatory lending, catch them saying, hey, come buy a house, you qualify. And they're like, what? I qualify? I make $20 a month. And they go, nope, you qualify, go for it, boom. And then give them those adjustable rate mortgages, and then doing all the other stuff behind the scenes they were doing. So it's just a whole different time going on there. Plus, remember, the government didn't own the housing market, the stock market, and the bond market, okay? They started that in 2010 forward. So this is, to me, a much different time than 06 and 07, just in my opinion. But please let me know what you think in the comments. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And then we have Steve here asking what website I use for the listed macroeconomics news coming up for the next day and stuff. And all I do, Steve, is go in there here and do TradingView Economic Calendar. And when you click on it, that's what it looks like. So that's what I use. If you have TradingView, it's actually in there as well. Now, Jeffrey says, another thing I noticed is that the inversion of the 10-year and 2-year treasury is rapidly dissipating. In my humble opinion, when the gap is closed, all hell is going to break loose. And then right here, Keeley says, what do you think about the Treasury 10-year, 3-month yield curve with the most inverted we've been since 1982? And let me go ahead and show you what he's talking about if you've never seen this. This is the 10-year, 2-year. And you can see when it's inverted, things aren't bad. When it uninverts, that's when things really go bad. The problem is knowing when it's actually uninverting. It looks like it's uninverting, right? Look at the 10-year, 3-month, which people seem to think is more accurate when it comes to predicting a recession, right? And when you look at this one, you kind of get the same thing. Looks like it's uninverting, right? But then when you pull out the long-term chart here, you can see on the 10-year, 3-month, it looks like it was uninverting many times before the dot-com bubble, and then finally it comes up. And usually on this one, it's like, I don't know, even from 3 to 9 months or something before you get the recession. But you can see multiple times where it looks like it was uninverting. But now it looks like it's going to do it. So we'll see if it carries out. And then you look at the 10-year and 2-year, and you can see right here, again, look to the right, it looks like it's uninverting. But again, you see it pop up multiple times, then pop back down. So maybe it is, maybe it's not. This one usually like anywhere from like 6 months to a year and a half on this one. If you go back and just kind of scroll and see how long it took for an official recession to hit, which again, we won't know it's an official recession. Those shaded areas do not exist until like a year and later. But now we know how to track the data. I mean, you'll see unemployment spike, things like that, and I'll be tracking it for you. So again, that's what they're talking about. We'll see if this happens. Bad things happen when the uninversion happens, okay? So just keep that in mind, which seems to be maybe where we're at. Now, our next viewer is talking about what's going to happen in the fourth quarter here. And he talks about how the past 10 years, the 5 and 20 EMA trend was up heading into October on both hourly and weekly. This year is different. The EMA is just recently crossed and trend is down. The 20 EMA is above the 5 EMA, completely different than the historic trend heading into October. And he's right. What he's talking about, here's your trend line right here. Looks pretty bearish, right? And this is your weekly. So again, you can go to short-term time frame and see the same thing. If we just scroll back, we'll go back 10 years like he's talking about. And you can see, obviously, we're heading up. We look bullish, right? The trend, EMAs are heading up, pointing up, so it always looks good. So if you keep going through, he's correct. But it also can turn pretty quickly, right? That's the key you got to think about. And it'll turn before the EMAs actually turn back up. So that's why I say October is going to be tricky. You look at most of these last 10 years, October was an iffy month. Sometimes it was good, sometimes it was bad, right? But when you look at November, December, it was pretty darn good. So that's what I'm saying. Really, November, December, everybody's going to bank on, but they'll load up in October to prepare for it. And so I appreciate you pointing that out. Now we got a bunch of questions about TLT and TMF, which is the triple leverage ETF of TLT. So it says, when do you think TLT/TMF will start going up? Is it possible they just won't and just continue to fall? Next one talks about, yes, please help us with bonds. I'm so under with TMF. Not sure if it'd be better to sell now or wait for it to recover. And then another one says, I'm holding a ton of TMF and obviously down and kind of scared. Would it be best to be patient and wait for rates to come down or sell at a loss? Obviously, I cannot tell you when to sell, that's for sure. But I'll show you a chart I showed the members actually yesterday. And this is a 20-year chart. This is the week or monthly chart, actually. But you can see this trend line right here. I mean, we had 3 different bounces, now 4 on that trend line. So is it going to be that easy? And that's going to continue to go? We'll have to see. Trend lines tend to be, pretty dang strong. But also, I've done like multiple videos over the last month for our members, what really happened with TLT, and this chart changes everything. Another one is, this is the bottom for TLT and what I'm looking at now. So the thing you got to remember is you literally have people who are bond experts. That's all they do is bonds. And they come out on national TV multiple times now saying, never seen anything like this before. And they just don't know, right? Because what's happening is you got multiple factors affecting what's going on with bonds, not just here in America, right? Because if Japan, whose currency is in trouble, if they continue, or if they're still doing it, selling treasuries and bonds, right? Dumping them on the market. And then the treasury is supposed to be issuing billions in bonds. What does that do? It increases the supply, drives down the price. Seems like the market is front running a lot of this, but we don't know how much, right? Also, I'll show you the charts about, it looks like a lot of this stuff is coming into a huge resistance area. So maybe they'll curl over, but maybe that's just for a few weeks. Maybe it goes back up. And that's the problem you got right now. Okay. That's why these banks are sitting underwater, like 1.7 trillion or something in unrealized losses in bonds right now. And so we've never seen anything like this as far as I know. Maybe the Great Depression was like this, but and so it's just hard to tell. Yeah, and that's why you got to be careful with triple leverage ETFs, man, because you will get gutted quickly. All right. on that. And so, again, if you're a member, please go watch those videos. If you're not, feel free to sign up and watch those videos. Maybe you get something out of it. But, is it like we're closer to a bottom than we were before? Sure, looking at those charts and stuff. So, just hang in there if you can, but you're going to have to make those decisions whether or not you're going to sell or not. One of our other viewers says the Fed has a $8.6 trillion on its books created from nothing and earning interest. It can absorb these debt bonds all day long, then over time close them out and lose the number from the balance sheet, as they could not drop the balance sheet on the bond market without killing the global markets. Very true. It is a problem that can be solved as long as the U.S. remains the default currency of the world. That is the key. As long as we remain the default currency, it's all good. Once that ends, it's going to be some rough times for a whole bunch of people, and people just don't realize how important that is. Now, you didn't mention the big threat for the next year. What if Republicans do force Democrats to agree to cut spending in order to get a budget deal passed? What if Biden can't borrow and spend an extra $2 trillion next year? And again, the important thing about this, remember, is they'll never balance that budget, folks. Okay, Republicans, when they get, they're not in the presidency and all that stuff, don't have that. They want to try to rein in spending, but if you look and just pull up the deficit, it don't matter who's in office. All right, they just spend it differently. All right, they also understand that. Imagine them balancing the budget and taking $2 trillion out of the economy. Imagine that, because how they do it. They got to either raise taxes, right, cut spending, or do a combination. What do you think is going to happen to the market? All right, the market crashed 20% when the Fed tried to roll their balance sheet off in 2018. Okay, we're talking about taking $2 trillion out of the economy. Let's get real about this. Okay, so one party might tell you they're all about fiscal, conservatism and all that stuff. But give me a break. Let's look at the budget. Just look at the deficit. There's ones that will show you who was in charge. It's all the same mess, okay? And they know it. They pull behind closed doors and they get up there and they say, here's what you take, constituents, and they'll go, yay. But behind closed doors, they're told, if you do this, the country is going to go, I don't know about depression, but it's going to be dang close. $2 trillion out of the economy. That's a boatload. That is a boatload. So imagine them just whispering that, what it would do, okay? Let alone doing it. So just keep that in mind, just trying to keep it real with you. Now, the next one says, how is the market going to go up with the government shutdown looking inevitable? And the response is, the market always finds a way to go up. We've had 2 shutdowns in the 21st century. I think one I showed you, it dropped like 7%, went back up 7% like in 2 weeks. And so, if they want to use it as an excuse to run the market down, that's what they're going to do. But the physical part of it, it shouldn't have that big an effect on it. So it's just a news event they can use to run it down or choose not to. There is a vote today as I'm recording this to see if they can finally get something passed. And, I'm just asking people from around the other countries, there's like 25 other countries that watch these videos, is your government this inept as well? Do they like to play chicken and wait to the last minute to try to get something done? I'm just curious. Or is it an American thing? I don't know. I've never looked at other people's governments and how they function, but I'm just curious about that. Then I got a response from one of last week's videos about politicians, and it said, I see the argument of both sides are corrupt, but there's always a lesser of two evils, so hopefully you don't ride the fence so hard that no one can tell the difference. And I find the comment funny because, again, the great thing about not being married to a party and being, I guess, a free thinker, to be able to think for myself, is there's not a whole lot of pros for either party, but there's a lot of cons. But, I just know, look, they aren't looking out for me, my wife, my son. And I know better than that, okay? I know who they're looking out for, and it ain't me. All right, maybe they're looking out for you. Maybe you think that, right? But, you saw it. If you watched last night's debate, one of them got caught in a bold-faced lie, right? As our Florida governor right here got caught in a bold-faced lie. I actually agree with what he did, by the way, by banning fracking here in Florida. But then he just goes on the stage. He can't tell the truth. Look at that. Because if he does, he's afraid he'll lose some votes. I'm like, please, we don't need to be fracking here in Florida. Look at the science. Look at what we're based on. All right, do your research. But that's how it is. So it's just a sad thing, and that's our fault. They can't tell us the truth. We'll vote them out. Or we won't vote for them at all to get them in. And so it's just the system as it is, right? And now the last one here, I'll just ask you guys: is there any way you can go back to a dark mode on the charts? And I'm going to assume you guys know what the dark mode is in TradingView. I use the white mode. The only reason I use that is because I've tried the dark mode. I'm colorblind, so I don't know if that's what it is, but I just can't make out the charts as good as I can when it's in the light mode, right? So, but on this channel, if the majority want the dark mode, then I'll switch to it. If you don't, I'll just stick to what I am. It's the first person to actually ask me that. So I told them I would ask you guys. So please put in the comments what you think on that. And, if I got to make the switch, I'll just make the switch, right? And my personal charts, I'll keep them in the light mode and stuff. So, I want to appreciate all you guys who participate. Please answer, give me your comments and everything down the bottom as well. And all week, I'll just start gathering them up. We'll put them out, try to answer as many questions as we can. Sorry if we didn't get to your questions, but again, I try to keep this a certain amount of time. So I appreciate you hanging in there with me. So please hit that like and subscribe button, guys. Appreciate all you guys who watch and stuff, and I hope you enjoy the rest of your weekend.